On one morning, a classified briefing. By afternoon, a $5 million options bet. 48 hours later, millions in profit. On a move so perfectly timed, it doesn't feel like market instinct, it feels like a map. In a sealed hearing room, an investigator doesn't accuse. He reads timestamps, call logs, and trades, then asks the question power hates most. Explain the pattern. The question was delivered without anger, without flourish, and without the slightest hint of political theater. It was precise, measured, and devastating in its simplicity. A classified briefing in the morning, a multi-million-dollar stock trade that same afternoon, and a federal approval announcement the very next day. The kind of sequence that, once spoken aloud, refuses to be dismissed as coincidence. In that moment, the House Oversight Committee hearing room fell completely silent. The voice belonged to FBI Director Kash Patel, and it carried the calm confidence of someone who knew the evidence would speak louder than any accusation. He did not raise his tone or gesture for effect. He spoke like a prosecutor who had already walked the case through every possible defense. This was not a question designed to provoke outrage. It was a question designed to expose a pattern. At the witness table sat Nancy Pelosi, former Speaker of the House, flanked by 3 high-priced attorneys in tailored suits. At 85 years old, she no longer held the gavel, but she still carried herself with the authority of someone who had been one of the most powerful figures in American politics for decades. Her signature St. John's suit, carefully styled hair, and composed posture reflected a career built on control. Yet something about her demeanor that day was different. This was not the kind of hearing Nancy Pelosi had faced countless times before. There were no partisan sound bites, no shouting matches, no ideological grandstanding. The room was officially closed to the public, but it was packed with committee members, investigators, and cameras recording every second for the congressional record. The press waited outside, aware that something significant was unfolding behind sealed doors. This was not political spectacle. It was forensic examination. The stated purpose of the hearing was routine oversight, a review of stock trading practices by members of Congress and their families. Republicans, newly empowered after the 2024 elections, had promised investigations into ethics and financial conduct. Nancy Pelosi had expected another familiar confrontation, one she could manage with practiced deflection. Instead, she walked into something far more dangerous. Kash Patel did not arrive with speeches or insinuations. He arrived with documents, charts, and timelines assembled over 8 months of FBI financial analysis. Trading records, phone logs, broker testimony, and congressional calendars had been cross-referenced down to the minute. This was not an inquiry built on suspicion. It was built on math. The core issue was not whether members of Congress were allowed to own stocks. It was whether access to non-public government information had been converted into pivot financial gain. Over 15 years, Paul Pelosi had executed hundreds of stock trades. A significant portion of those trades occurred shortly after Nancy Pelosi attended classified briefings or sensitive legislative meetings. The returns on those trades were extraordinary. Patel's investigation identified 138 transactions that followed a consistent and troubling pattern. Nancy Pelosi received material non-public information through her role in Congress. Within days, sometimes hours, Paul Pelosi placed large, targeted trades connected to that information. Those trades repeatedly generated outsized profits or avoided major losses. On trades unrelated to Nancy Pelosi's congressional work, Paul Pelosi's performance was unremarkable. His returns tracked slightly below market averages, consistent with an ordinary investor. But when his trades aligned with her access to classified briefings or closed-door negotiations, his returns spiked dramatically. The contrast was impossible to ignore. The hearing did not begin with conclusions. It began with timelines. Patel laid out dates, times, and sequences, allowing the pattern to reveal itself. He showed when Nancy Pelosi entered secure briefing rooms and when she exited them. He showed when phone calls were made and how long they lasted. He showed when trades were executed and how the market responded. Nancy Pelosi had survived decades of political combat by reframing narratives and redirecting attention. She had weathered ethics complaints, media scrutiny, and partisan attacks, but none of those had arrived armed with this level of documentation. This was not about perception, it was about sequence and probability. The room felt less like a congressional chamber and more like a courtroom. Every statement was anchored to a document. Every assertion was backed by records obtained through subpoenas. There was no room for rhetorical maneuvering. Facts occupied the space where arguments usually lived. Patel made clear that this was not a political investigation. It was a financial crimes inquiry conducted by the FBI's white-collar division. The analysis did not rely on assumptions or interpretations. It relied on numbers, timestamps, and corroborated testimony. Politics, for once, had been stripped out of the equation. Nancy Pelosi listened as her net worth was discussed not as a symbol of success, but as a data point. She had entered Congress in 1987 with an already substantial fortune. For years, her wealth grew at a steady, explainable pace. Then, as her power and access expanded, the curve steepened dramatically. The investigation did not accuse her of intelligence or luck. It questioned improbability, how a household on a congressional salary accumulated hundreds of millions of dollars, how a non-professional investor outperformed the market with near-perfect timing, how that performance correlated precisely with moments of privileged access. The opening phase of the hearing did not declare guilt. It did something more unsettling. It removed the plausible explanations one by one. What remained was a pattern that demanded answers. For the first time in her career, Nancy Pelosi was not being challenged by political opponents. She was being confronted by evidence. And evidence does not respond to experience, status, or reputation. This hearing was not about rewriting history or settling scores. It was about whether power had quietly transformed into profit, and whether that transformation had finally been measured. As the opening concluded, one reality had already settled over the room. Whatever the outcome, the old assumptions about untouchable figures in American politics were no longer holding. The story unfolding was not about ideology. It was about access, timing, and money. And it had only just begun. The hearing did not unfold as a clash between political rivals, and it did not follow the familiar script of congressional sparring. From the first minutes, it became clear that this session was structured like a case presentation rather than an interrogation. Kash Patel spoke slowly, deliberately, and without editorial commentary. Each statement was tethered to a document, and each document carried a timestamp. The room adjusted its expectations almost immediately. Nancy Pelosi had entered the hearing assuming she was facing another episode of partisan pressure. Over 4 decades in public life, she had learned to neutralize attacks by reframing them as political theater. She expected accusations without proof, questions designed for headlines rather than answers. What she encountered instead was a chronological reconstruction of 15 years of financial activity. It was not an argument. It was a sequence. Patel began by narrowing the focus of the investigation to a single principle: correlation between access and action. He explained that the FBI's analysis did not assume wrongdoing at the outset. The team started by mapping Paul Pelosi's trading history across multiple brokerage accounts. Each trade was logged, dated, and categorized by sector. Only then were those records compared to Nancy Pelosi's congressional schedule. The result of that comparison formed the backbone of the case. Patel explained that of the hundreds of trades reviewed, a specific subset consistently followed moments when Nancy Pelosi received sensitive or non-public information. These were not trades placed months later, after public announcements or market speculation had time to mature. They occurred within days, often within hours. The pattern repeated with unsettling regularity. The committee members were shown a color-coded timeline projected on a screen. Blue bars represented congressional briefings, closed-door negotiations, and classified meetings. Red markers indicated stock trades executed by Paul Pelosi. When layered together, the visual was difficult to dismiss. The markers aligned too often to be brushed aside as coincidence. Patel emphasized that the analysis did not rely on insider knowledge of legislative outcomes after the fact. The team reconstructed what information was available to the public at each moment. They examined news coverage, analyst reports, and market sentiment from those dates. In many instances, the trades preceded any public indication of what was about to happen. That gap between private knowledge and public awareness was central to the inquiry. Nancy Pelosi sat quietly as the charts scrolled past. Her attorneys took notes, occasionally whispering among themselves. The posture she maintained was one of restraint, not surprise. But the room sensed a shift as the presentation moved away from generalities and toward specifics. Dates replaced descriptions, and dollar figures replaced abstractions. Patel then addressed a common defense that had long insulated congressional families from scrutiny. He acknowledged that spouses of lawmakers are legally permitted to trade stocks. Disclosure laws exist, and those disclosures had been filed. The issue, he explained, was not legality in the abstract. It was whether trades were informed by material non-public information obtained through official duties. To illustrate that distinction, Patel introduced the first detailed case study. He walked the committee through the events of March 2020, when the early stages of the COVID-19 crisis were unfolding. Nancy Pelosi had attended multiple briefings detailing projected economic impacts and potential shutdowns. These briefings included assessments not yet shared with the public. Within days of those briefings, Paul Pelosi sold substantial positions in airline, hotel, and cruise line stocks. At the time, public messaging remained cautious, and markets had not fully priced in the severity of what was coming. Shortly afterward, widespread shutdowns were announced, and those sectors collapsed. The timing, Patel noted, spared Paul Pelosi significant losses. The investigator did not claim that selling stocks during uncertain times was inherently suspicious. Instead, he highlighted the precision of the timing. Many investors reacted after markets began to fall. Paul Pelosi's trades preceded the crash. That distinction mattered. Next, Patel addressed the December 2020 transaction that had opened the hearing. Nancy Pelosi attended a classified briefing on Operation Warp Speed, which included detailed discussion of vaccine approval timelines. The information presented was restricted and not available to the public. That same afternoon, Paul Pelosi purchased millions of dollars in call options tied to Pfizer. The following day, the FDA announced emergency authorization for the vaccine. Pfizer's stock surged, and the options rapidly increased in value. Patel did not describe the trade as illegal on its face. He described it as improbable without foreknowledge. The market had no confirmed signal of imminent approval until the announcement. As Patel continued, he made a deliberate choice to avoid rhetorical flourish. He did not accuse Nancy Pelosi of intent or motive. He described sequence and consequence, briefing, call, trade, announcement, profit. The repetition of that structure gave the narrative its force. The presentation moved next to legislative negotiations surrounding the infrastructure bill. Nancy Pelosi had been deeply involved in shaping the final provisions, including which sectors and companies would benefit most from federal investment. Those details were fluid and confidential until the bill was finalized. During that period, Paul Pelosi purchased stock in companies positioned to gain from infrastructure spending. When the bill passed, several of those companies saw measurable gains tied directly to the legislation. Patel pointed out that the trades were not broad market bets. They were targeted, concentrated positions. The specificity suggested something more than general optimism about infrastructure spending. Another case involved semiconductor policy and subsidies. Nancy Pelosi participated in discussions about legislation designed to bolster domestic chip manufacturing. The scope and scale of those subsidies were not publicly known at the time. Shortly after those discussions, Paul Pelosi invested heavily in semiconductor-related equities. As with previous examples, the timing preceded public disclosure. The market reacted after details became known. Paul Pelosi's positions were already in place. Patel emphasized that this was not hindsight analysis. The FBI reconstructed what information was available at the moment each trade was executed. The hearing room remained quiet as these examples accumulated. No single trade carried the weight of the entire case. Together, they formed a mosaic. Each tile was small, but the image they created was increasingly clear. Patel then introduced phone records obtained through subpoena. He explained that the FBI examined call logs between Nancy Pelosi and her husband on days when sensitive information was received. The analysis did not focus on content, which remained protected, but on timing and frequency. The results showed a marked increase in calls shortly after briefings. In dozens of instances, Nancy Pelosi contacted Paul Pelosi within hours of leaving classified or closed-door meetings. In many of those cases, Paul Pelosi then contacted his broker shortly afterward. Trades followed. Patel did not speculate about what was said. He allowed the sequence to speak for itself. The investigator acknowledged the existence of spousal privilege. He did not argue that spouses should not speak to one another. He argued that when those conversations consistently preceded market-moving trades, they became relevant to understanding how information flowed. Privilege did not erase patterns. Attention then turned to Paul Pelosi's overall investment performance. Patel presented comparative data showing that on trades unrelated to Nancy Pelosi's congressional work, returns were modest. They tracked the market, sometimes underperforming. On trades aligned with her access to sensitive information, returns were dramatically higher. This discrepancy formed one of the most striking elements of the case. It suggested that success was not evenly distributed across all investment activity. It appeared concentrated in moments where access to information was asymmetric. Patel described this as a statistical anomaly that warranted explanation. The committee members were shown graphs illustrating this divergence. The visual contrast between the two categories of trades was stark. It raised questions that could not be answered by references to general market savvy. Something else appeared to be at work. As the hearing progressed, Nancy Pelosi's legal team remained vigilant. They objected selectively, primarily when questions edged toward inference about intent. Patel adjusted his language accordingly, focusing on documentation rather than interpretation. The exchange underscored the careful balance being maintained. What made the session remarkable was its absence of emotional escalation. No one raised their voice. No one accused the former speaker of corruption in sweeping terms. Instead, The room was guided through evidence, one piece at a time. The cumulative effect was far more powerful than confrontation. Patel also addressed Nancy Pelosi's accumulation of wealth over time. He presented a chart showing her net worth at the start of her congressional career and its growth over the years. The curve steepened notably during periods when her access to classified information expanded. The timing aligned with her rise to leadership positions. He did not suggest that wealth itself was improper. He questioned whether the pace and scale of that growth could be explained by salary and disclosed income alone. The numbers invited scrutiny rather than accusation. They asked the committee to consider plausibility. As the first half of the hearing drew to a close, the narrative had shifted decisively. This was no longer a discussion about whether lawmakers should trade stocks. It was about whether existing safeguards were sufficient when confronted with concentrated power and privileged access. The evidence suggested gaps that had gone unexamined for years. Nancy Pelosi remained composed, but the room sensed the narrowing of options. Each defense traditionally used to deflect scrutiny had been preemptively addressed. Disclosure did not negate timing. Independence did not negate correlation. Experience did not negate improbability. The opening hours of testimony established the framework for what would follow. The investigation was not presenting conclusions yet. It was building a foundation so dense that conclusions would become difficult to avoid. And as the committee prepared to move deeper into specific testimony, the weight of that foundation was unmistakable. As the hearing resumed, the tone in the room had shifted from curiosity to gravity. The evidence already presented had narrowed the range of explanations available. What remained was no longer theoretical, but mechanical. The question was not whether the pattern existed, but how it operated. Patel signaled that the next phase would address that directly. He began with the communications layer, an element often overlooked in public debates about congressional trading. The FBI, he explained, had not sought to listen to conversations or interpret their substance. Instead, the focus was on timing, frequency, and sequencing. Calls were treated like timestamps in a transaction ledger. When placed beside briefings and trades, they formed a chain. Patel displayed a new chart, this one mapping phone activity over a 15-year period. On most days, contact between Nancy Pelosi and Paul Pelosi appeared routine. Calls were spread evenly across weeks and months, consistent with long-term spouses. But on days when Nancy Pelosi attended classified briefings or sensitive negotiations, the pattern changed sharply. Calls clustered tightly in the hours immediately following those meetings. The investigator emphasized that this clustering was not occasional. It appeared in a substantial majority of the flagged trades. In those cases, Nancy Pelosi contacted her husband shortly after receiving non-public information. Paul Pelosi then contacted his broker, often the same day. Trades followed within 24 hours. The committee was shown side-by-side timelines illustrating this sequence. Blue lines marked briefings, green lines marked spousal calls, and red lines marked trades. The alignment was striking. It did not rely on interpretation or inference. It relied on clocks. Patel acknowledged that timing alone does not establish intent. Spouses speak frequently, and markets move unpredictably. But repetition changes the analysis. When the same sequence occurs dozens of times, the probability of chance diminishes rapidly. At that point, explanation becomes necessary. The next portion of the presentation focused on broker testimony. Patel explained that the FBI had interviewed Paul Pelosi's broker under oath. This individual had managed numerous accounts and maintained detailed notes of client communications. In exchange for cooperation, the broker provided records and recollections relevant to the investigation. Those records were now part of the committee's evidence. Rather than summarize, Patel read directly from the broker's sworn statements. The language was careful and factual. The broker described receiving calls from Paul Pelosi that referenced information attributed to Nancy Pelosi. These references were not vague impressions, but explicit attributions. According to the testimony, Paul Pelosi frequently cited what Nancy said when placing certain trades. The room reacted subtly but visibly to this portion of the hearing. Until this moment, the evidence had been circumstantial, albeit powerful. Broker testimony introduced an element of direct linkage. It suggested that information flow was not merely inferred but articulated. Patel made clear that the committee would evaluate this testimony alongside other records. Patel then returned to specific case studies, revisiting them with this additional context. The December 2020 Pfizer trade was reconstructed minute by minute. Nancy Pelosi attended the classified briefing in the morning. Phone records showed a call to Paul Pelosi shortly after the briefing ended. That evening, Paul Pelosi contacted his broker. The trade executed before public announcement. Patel noted that nothing in public reporting at that time confirmed the approval timeline. Analysts speculated, but uncertainty remained. The trade's structure, including its size and expiration window, suggested confidence rather than speculation. The sequence raised questions that could not be resolved by pointing to general market awareness. The timing remained the central issue. Another example involved semiconductor policy discussions. Nancy Pelosi participated in negotiations concerning subsidies and regulatory frameworks. Those discussions were confidential and ongoing. Shortly thereafter, Paul Pelosi increased exposure to specific semiconductor companies positioned to benefit from the anticipated outcome. The broker's notes referenced expectations aligned with those discussions. Patel emphasized that these were not broad sector bets spread across multiple companies. They were concentrated positions targeting firms most likely to benefit from the specific policy being discussed. That level of precision, he argued, reduced the likelihood of coincidence. It suggested informed decision-making. The source of that information became the critical question. As the presentation continued, the cumulative effect became increasingly difficult to ignore. Each example reinforced the same structure. Access preceded communication. Communication preceded action. Action preceded market movement. The repetition was not dramatic. It was methodical. Nancy Pelosi's attorneys objected periodically, primarily on grounds of privilege. Patel acknowledged those objections and adjusted his phrasing. He did not claim knowledge of what was said in private conversations. He described what happened around them. The distinction was deliberate. The committee chair allowed the presentation to proceed with minimal interruption. Members appeared less interested in scoring political points than in understanding the scope of what was being presented. Notes were taken and questions were reserved. The atmosphere was closer to a deposition than a hearing. Attention then shifted to the financial outcome of the flagged trades. Patel presented aggregate figures showing total gains and losses avoided. The numbers were significant, but he cautioned against focusing solely on totals. The relevance lay in consistency. Profits accrued disproportionately during periods of heightened access. Patel contrasted these results with Paul Pelosi's broader trading history. Outside the flagged trades, performance was ordinary. There were gains and losses typical of an active investor. The exceptional returns clustered tightly around moments of informational advantage. This divergence was a recurring theme. The investigator addressed potential alternative explanations. He acknowledged that experienced investors can sometimes anticipate policy outcomes. He also noted that market participants often trade on rumor and probability. But he returned repeatedly to the same point. Anticipation does not usually produce such precise timing so consistently. As the hearing moved deeper into its fifth hour, the emotional tenor remained restrained. There were no raised voices or dramatic confrontations. The weight came from accumulation rather than intensity. Each new document added another layer to an already dense record. The room seemed aware that the narrative was solidifying. Eventually, the committee chair invited Nancy Pelosi to respond. The moment carried obvious significance. After hours of listening to evidence, the former speaker was given the opportunity to explain the pattern. The room grew noticeably quieter. Even routine movements stopped. Nancy Pelosi began with a familiar refrain. She stated that her husband made his own investment decisions. She emphasized that disclosures were filed as required. She characterized the inquiry as politically motivated. The words were measured but familiar. Patel followed up immediately with specifics. He returned to the December 2020 trade and asked what publicly available information justified its timing. He referenced the classified nature of the briefing and the absence of public confirmation. The question was narrow and direct. Silence followed. He then asked about the COVID-related trades. He cited briefing dates and sale dates. He asked what public signals prompted those moves. Again, there was no substantive response. The pattern repeated. As questions became more specific, Nancy Pelosi's legal team intervened more frequently. They advised caution. The tension in the room increased, not through confrontation but through constraint. Each unanswered question added weight. Finally, Patel asked a direct question about information sharing. He asked whether Nancy Pelosi had conveyed details from classified briefings to her husband. The pause that followed was long and unmistakable. It was a pause filled with calculation. Then came the invocation of constitutional protection. Nancy Pelosi stated that she was invoking her Fifth Amendment right. The words landed heavily. It was a legal choice, not an admission. But in the context of the hearing, it carried profound implications. The room reacted audibly. Patel acknowledged the invocation without commentary. He proceeded to ask follow-up questions framed around the same theme. Each time, the response was the same. The repetition reinforced the gravity of the moment. This was no longer about hypothetical scenarios. The committee chair addressed the record, noting the invocation of the Fifth Amendment. He emphasized that witnesses are entitled to constitutional protections. He also noted that such invocations do not resolve factual questions. The distinction was clear. As the hearing drew toward its conclusion, Patel summarized the evidence presented. He did not offer conclusions of guilt. He outlined findings and referrals. He stated that the matter warranted further investigation by appropriate authorities. The language was careful but firm. The committee chair announced that the record would be compiled and reviewed. Referrals to other bodies would be considered. Legislative responses would be discussed. The hearing was then adjourned. Nancy Pelosi remained seated for several moments after the cameras stopped. Her attorneys gathered their materials quietly. Staff members moved with deliberate efficiency. The room emptied slowly. What remained after the hearing was not a verdict, but a rupture. Long-standing assumptions about congressional trading had been challenged in granular detail. The evidence had reframed a familiar debate into a concrete inquiry. Whether or not charges would follow, the narrative had shifted. The main body of the hearing accomplished something rare. It transformed speculation into documentation. It replaced rumor with records. It forced a reckoning not through outrage, but through structure. By the time the doors closed, one reality was unavoidable. The question of how power, access, and money intersect was no longer abstract. It had been mapped, time-stamped, and placed into the public record. And once mapped, It could not be unseen. The hearing did not end with a verdict, and it was never designed to. It ended with a record, assembled carefully and deliberately, leaving interpretation to those willing to confront it honestly. No vote was taken, no sentence imposed, no declaration of guilt delivered from the dais. What remained was something more enduring than a ruling, a pattern placed on the table and left there, unresolved. In Washington, ambiguity has long been a form of shelter. Political actors survive by operating in the space between what is legal and what is defensible. This hearing narrowed that space without eliminating it entirely. The evidence did not shout. It accumulated. It asked not for outrage, but for explanation. Throughout the session, no one disputed the existence of the trades. No one denied the timing of the briefings. No one challenged the authenticity of the records or the accuracy of the timestamps. The debate did not revolve around facts, but around meaning. And meaning, in systems of power, is often where accountability either begins or disappears. The structure of the presentation mattered as much as its substance. By refusing to frame the issue as partisan conflict, the hearing stripped away familiar defenses. There were no ideological lines to retreat behind. What stood in their place was chronology, repetition, and probability. These are tools that do not bend easily to rhetoric. The invocation of constitutional rights altered the room without resolving it. Such rights exist precisely because the law recognizes the danger of compelled testimony. At the same time, silence in the face of detailed evidence carries its own weight. The hearing acknowledged both realities without reconciling them. That tension was left intact. What made the moment unsettling was not a single allegation, but the cumulative erosion of alternative explanations. Each familiar justification was tested against the record and found incomplete. Independence did not explain synchronization. Disclosure did not explain foresight. Experience did not explain consistency. This was not the exposure of a loophole, but of a system that relies heavily on trust. Members of Congress are entrusted with information that can move markets, alter industries, and reshape economies. The expectation has always been that restraint governs access. The hearing asked whether that expectation has been sufficiently enforced or merely assumed. For years, public debate around congressional trading has focused on optics rather than mechanisms. The argument often ends with disclosure as a cure-all. Yet, disclosure happens after the fact, when advantage has already been realized. The hearing forced attention onto the moment where disclosure is irrelevant, the moment information changes hands. No one in the room claimed that ambition alone is corrupt. No one argued that wealth disqualifies a person from public service. The issue presented was narrower and more uncomfortable. It asked whether access itself becomes a form of currency when oversight fails, and if so, whether the law has kept pace with reality. The implications extended beyond any single figure or family. If the pattern presented can exist undetected for years, it suggests structural vulnerability. Not to malice, but to temptation. Systems do not collapse only because of bad actors, but because of insufficient friction against misuse. Supporters and critics alike were left in unfamiliar territory. Those inclined to defend long-serving leaders struggled to reconcile loyalty with documentation. Those eager to condemn were reminded that process matters as much as outcome. The hearing offered neither side the satisfaction of closure. What followed was not resolution, but reflection. Lawmakers began discussing reforms not because outrage demanded it, but because the record made avoidance harder. The conversation shifted from whether trading should be disclosed to whether it should be permitted at all. That shift marked a quiet but significant change. The conclusion of the hearing did not announce the end of a story. It marked the end of plausible ignorance. From that point forward, claims of unawareness would require deliberate forgetting. The evidence had entered the institutional memory. History often turns not on judgments, but on questions that refuse to fade. This hearing introduced one such question into the bloodstream of American governance. It asked whether the boundaries between service and self-interest have become too porous to police casually, and whether the public is prepared to accept that ambiguity indefinitely. In the absence of a final ruling, responsibility disperses outward. It moves from investigators to legislators, from committees to voters, from institutions to culture. The record does not compel a single conclusion, but it demands engagement. Silence becomes a choice rather than a default. Power does not require corruption to erode trust. It requires only opacity combined with opportunity. The hearing illuminated both without declaring either illegal. That restraint made the challenge sharper, not weaker. So the story does not end with punishment or absolution. It ends with a mirror held up to the system itself, a system that grants extraordinary access while relying on personal restraint to prevent abuse. The question is not what happened in that room, but what happens next. If access creates advantage, and advantage creates wealth, and oversight arrives only after the fact, then at what point does public service stop being a trust and start becoming a transaction? And who decides where that line is drawn?